All right. Well, much appreciated. Exciting to be here to talk with everyone today. We have a lot of cool stuff to go through. It's been, like we were starting out the call talking about, it's been a pretty tumultuous few years. And that just means the acceleration of some cycles. And that really has an impact on the credit space, on the lending space, and also on the businesses that are accessing that credit. So excited to run through and see where we can uh, inform and help you become more knowledgeable how to, identify the opportunities, understand the market, and make the right decision for your business. So first, we'll get into the expectations. So I think the first thing is to remember that it is a new environment, right? So the environment that we're in today is very different than the one last year, and even more different than the one 2 years ago. So with what happened with the pandemic and the stimulus, we kind of accelerated some cycles in business. So we had first a down cycle with the pandemic and the lockdowns. Then we had the government step in and provide a ton of cash, trillions of dollars in stimulus, and then the economy got overheated, and then interest rates rose, and because to fight the inflation that was caused by kind of the disruption of the supply chain and the subsequent um, money that was distributed across the U.S. So we've seen because of that a bust cycle, a boom cycle, and a bust cycle all in the span of 3 years, which normally is not how it works. Right now, that means we're in a down cycle relative to what was very much an upcycle, where there was very, very easy money 1 to 2 years ago, really low cost of capital, easy access to financing. Everything was great. Now it's a little bit different. You've seen some stress in the banking system. You've seen some banks go under and have to get acquired. Banks are really tightening up now. Cost of capital is very high. So just recognizing the environment is different, I think is one of the first steps, because you have to adapt and adjust and adapt yourself and your decision making, your business for the new environment. So changing what the expectations are, understanding that, hey, it's a new environment you have to operate in, is, I think, one of the really important first steps. The products that are available to you, the structure of those products are going to be very different. Banks are putting a lot more terms and covenants in there. Some products that were available before are no longer available. Different credit tiers have varying access degrees to credit as well compared to before. So what's important for you is to really just focus on the cost of capital relative to the opportunity that you have at hand, and comparing those two and making sure, not comparing the cost of capital now to what it was 1 to 2 years ago, but carrying the cost of capital that you have now to what your opportunity is now in this current market. When you're evaluating kind of your decision, the decision for taking out financing for the business for an opportunity that you have. So next, I think one of the other things is not to try to time the market in this. The truth is, I think everyone on the news and on TV is going to say they have the answer, they know what's going to happen, or they're going to write an article about it. Um, well, some people are going to be right, but rarely, no one knows the future, right? Otherwise, everyone would be preparing to get rich right now. No one really knows what's going to happen. We truly are in a pretty unprecedented scenario right now with what's happened over the past few years. It may be a few months, it may be a year, it may be 2 years before things kind of stabilize and we move from the down cycle to the up cycle. No one really knows what's going to happen. And so for you and your business, I think trying to make decisions about what you think may happen in the future can be, have a negative impact, right? We've seen a lot of businesses come in, well, like 6, 12 months ago, I think it's going to get better in the next few months. I read this or that. And, that really hasn't come to take place. And that just means they didn't make the decisions at that time. They were making those decisions based on faulty assumptions in the future. So none of us know what's going to happen. And so don't try to time the market or base your decisions on what the market's going to do, because really no one knows. Um, And what really matters is for you, is for your business right now, is making the best decision on the opportunities that you have for the business. Um, all right, other tips to optimize your business success and funding. These are always important, but they're extra important right now. So, and they're it's not rocket science or anything. These are pretty straightforward. You can all do them. I'll give a few examples, but they seem like little things, and they are, but they're really a big deal to lenders. And you can have no impact on the business. It can be no different, but you can present your business in a way to optimize yourself for success and getting the products you want access to, and get optimizing the rates, terms, structures that you really are really going to be more advantageous for you. So a few of those things. Show that you can manage your cash flow, right? No negative days or NSFs, right? So that's the first one. Don't get any chargebacks. Don't ever, not sufficient fund fees. Don't get any, don't let your balance ever go negative. They are immediately going to pick up on that, and it's automatically basically going to move you down one or two, or so just make sure that you don't do it, right? If you do, then make sure you just don't do it again for about 3 months, right? That's when you'll, in some situations, you may get a little bit of a reset. Sometimes it's 6 months. So, but if it happens, then that means you're gonna be moved down a credit tier somewhere from 3 to 6 to 12 months, depending on, the credit product and the institution that you're dealing with. So make sure no negative days, no not sufficient fund fees, coming through your business bank account. The next is keep your cash balances as high as you can. What banks and lenders are looking for right now is stability. There's a lot of volatility in the market. There's a lot of volatility in banking. The last thing they want to do is take on more risk and volatility. So if you show yourself as being stable and predictable right now, they're going to love you a lot more, right? That's what they're looking for. And so it's something as simple as, if you have a big expense you need to pay, but you're expecting some money to come in. I've had people say, well, I'm just going to pay this expense off, get it out of the way. I know I have a check coming in a few days or tomorrow, even tomorrow, or, on Friday, whatever it is. And what's the difference, right? If my money's coming in anyway, don't, I would say, don't try not to do that if it's at all possible. Wait until the money comes in first, then make the payment, right? Because if you make the big expense and your cash goes down to close to zero, or it goes down, that's going to be viewed as a negative signal, right? And you're not, in many cases, you're not going to get a chance to tell that story, right? Or they won't be able to listen, even if they wanted to, in some cases, because the model that they've built is going to define that. And so it's going to show that you had revenue and then it went way down, scary for them. And then it went back up, which is good, it's better. But that part that it went down is scary to them. Now, it could be the exact same thing. If you could delay that payment for a few days, now you're going good. Now it goes up. That's a positive signal. Wow, look at that. And then boom, you pay the expense and now it's stable again. Now all of a sudden you framed it in a way that's very, very positive, right? Your revenue is stable, but sometimes it pops up and it goes high. That's going to be looked at as very positive things, even though it's just a few days. I've seen offers, for funding retracted or modified just because of this, because they paid off a big expense. The balance went down and the lender got scared. They got skittish and like, what's going on? Your balance was really low. And despite there being a really good story behind that, sometimes it won't matter. They won't be able to listen to that. So just one thing that you can do: keep your balances as often as you can, as high as you can, so you can show that uh, stability. Um, Control and minimize expenses until after you're funded. If you can, hold off on as many of that until the funding comes in, and then make those expenses. That's another great way to do it. So you can have your cash flow going, keep it stable, get the funding, and then pay off those expenses. Again, try not to do it right before. Um, Keep your personal FICO up. Don't miss payments on anything, whether, even if it's personal, right? They're in many cases going to look at that as well. So don't do that. Have your financial statements ready and clean, ready to go. In many cases, for the better products that are going to want these, so clean books, have those prepared and ready to go. Um, and lastly, and probably one of the most important, don't wait until you're in need of the money, plan ahead. Everything that a lender is looking for is determined if you need money. And I think for business owners, the common misconception is that you only want to go apply for a loan when you need the money, right? And that's actually not how you want to approach it for business finance. Personal is a whole different ballgame, right? But for business finance, you want to go when you have an opportunity and you're planning ahead for that opportunity. When you need money, it's probably going to be too late. And the everything a lender is looking for is to say if you need it. They don't want to invest in companies who need it. They don't. They want to invest in companies who don't need it but have a great opportunity that they can go take advantage of if they had it, right? And that's how you have to frame your business. If you're thinking about a loan, well, I'm gonna hold off to the last second because I think I can get straight by without doing it, right? And oh wait, all right, I really need it now. Let me go try. It's way worse terms. They're gonna sniff it out. They're gonna look at detail. Everything they do is basically trying to identify if you're in that situation. So plan ahead. Um, don't put yourself in that spot. Try to use financing as a tool for an opportunity. Use it as a tool for planning ahead. You just have to be able to see around the corner, see a couple steps ahead. If you do that, or you take out a product that makes it easier for you to do that, you'll be in a much better position. And we'll go through a few examples of how you can do that in a moment. Um, the next is impact on different industries and knowing what your impact is, right? Because it's not necessarily how your business is performing to how it was before, right? That matters less because remember, the market and the environment is different. What really matters the most is how you are performing relative to your peers in your industry, right? So keep that in mind. Just because things are tough or because they're awesome, one of the two, depending, what really matters is how you're performing to your peers. If they're tough for you, that means they're also tough for everyone. So how are you able to perform in a tough environment? Even if it's worse than what you were doing last year, if it's better than what others are doing, right? That's going to be more important right now, right? You want to show that you're in the top X, top 5%, top 1%, top 10% of companies in your industry, right? And so when times are harder for you, then you're able to outperform. And when things are great for you, you're able to outperform as well, right? So that's really what's important. How are you performing relative to your peers right now? Examples of industries that are more highly impacted, things like transportation. Why is that? Well, because before everyone was stocking up on inventory, buying in bulk, money was easy, trying to get all of this product in demand. Supply chains were clogged up. It was taking forever. All right, if it's going to take forever, I'm going to buy a bunch of it and stock up because who knows when I'm going to be able to get it. Well, everyone did that. Now everyone's overstocked. Everyone has too much inventory, right? So transportation, they had a ton of deliveries to make before, right? 1 to 2 years ago. Now they have very few. So those businesses are going to be a lot higher. Okay, there's not as much freight to move. There's not as many jobs to take on. Margins are going to be compressed. They were really high before. Everyone's competing and trying to get your services. Now no one needs it. Margins are compressing. Construction, it's similar. Lots of people are building homes, buying new homes, remodeling their homes, fixing their homes up. They're stuck in their home the whole time during the pandemic. They have some money. Maybe they want to, build a new home theater, whatever it may be. But now there's less of that, right? It makes sense why those are in a down cycle. Those are industries when the recession or the economy's down, the business are going to be down. So you're going to have to think about it. Am I in that situation? Okay, I am. How can I outperform relative to my peers, right? Ones that are less impacted or are impacted in a positive way are, industries like auto repair, right? Well, no one's buying cars right now because interest rates are too high, right? The loan on a car is too much. Well, before you couldn't find a car to buy. Now, and on now everyone's fixing their current cars up. They don't want to buy one. They just want to make sure their current one is working well. So auto repair is going to be very positively impacted. There's going to be lots of business at the moment. Restaurants, it's similar. Everyone was cooped up for a year or two. No one was going out. Now everyone has extra money because they saved it while they were stuck inside um, for that period of time. And also there was a lot of stimulus. So people have excess cash and they want to go out and see their family and their friends. And so that's another industry that's pretty positively impacted. which means there's lots of opportunities to go out there and grow, grab market share, get new customers, things like that. So understand which type of industry you're in. Each industry, you can think about it in that way, and understand if your industry that's been positively or negatively impacted by what's happened over the last few years. Um, all right, now different products and things that you can do. I think planning ahead can be difficult sometimes. There's no doubt about it. You don't know the future, just like you don't know what the market's going to do or what the Fed is going to do. You also don't know necessarily what's going to happen in the future for your business. So you got to try to be able to see ahead. Look for signal for product. You have a full pipeline of customers, right? Knowing your numbers and your data is really important. But when you're going out and you're looking for financing, um, things that give you flexibility on your repayments or flexibility when you can draw down or take the funds is really important. So, for example, if you think you may have an opportunity coming up, but you're not sure, right? Well, maybe you could do something like taking out a line of credit, and instead of drawing the full amount, maybe try to draw less. Or if they some require a minimum draw, sometimes you can just pay it back with no penalties as well. So check for prepayment penalties, check what the minimum draw is. Sometimes you can get a minimum draw as low as $500, right? And maybe you can open up a $50,000 line. That way, you're only paying interest on the balance that you maintain. And so that way you can have it open. And whenever the time is right, you can draw. And whenever the time is right for you to pay back, you can pay back. That's maximum flexibility. And if you're only paying interest on the days you have a balance, if you only need it for a week, you only pay interest for a week. If you need it for 6 months, well, you're going to have to pay the interest for the 6 months, but it gives you the flexibility to do it when it's best for you and only pay interest on the days that you need to. And only draw from it when you need to. It also allows you to get it set up, get it approved, get it set up, and then draw from it. So you don't have to go through an approval process later, right? Where maybe your conditions for your business have changed and you're no longer going to be approved for the product you want. If you get it set up early, when you're in the best situation and the best scenario, you can get the best terms with no negative downside, right? Without having to really pay any interest or many fees until later on. So that's one thing that you can do. Another is focus on products that have flexible repayment schedules. Things like no prepayment penalties that I mentioned. Another is payments that flex up and down with your revenue. Many products as well, the payments will fluctuate depending on your sale. So depending on the revenue that you're bringing in. There's two ways that it's happened. One, it's automated, so it'll look at your sale for the day and then deduct a payment based on that. Another one would be that it has a fixed set fee, and if you want to adjust that, you need to call in and say, "Hey, my revenue's down. Please make the adjustment down so that it's only an X percent, whatever that percent is, going to be best for you of your revenue." Um, so those are some other things that make it really easy for it to be flexible. That way, if you have a slow sales month, okay, you're paying a lot less in interest on those and repayments of those loans. Um, Others are, longer term products. If you can stretch it out, that could be really good for you. So the payments are less. So if you can get a longer term product, those are a lot harder to get right now, for sure. But if you can, that could be good. Also, shorter term products. If you can pay lower fees and pay lower interest by only taking it for the time that you need, maybe you only need a 2 month or a 3 month or a 4 month product because you want to get it, use it, and pay it right back. So just look at your situation. When is the cash going to be coming in? When is it going to be the best time to repay? And then, look out for some of these structures that you can maintain flexibility. The last thing you want to do again is wait till you really need it and then go and apply for financing now. Now the rates are going to be way more expensive, way less money that you have access to. Um, and if you can get approved at all, right? And that's unfortunate, right? Because if you can plan ahead, you're ready. If you plan and apply when your business is at its strongest, then you will get the better products, you will get the better terms, and it will be better for your business if you plan it out like that. Um, all right. The next is just focus on your opportunities. Look at your business and focus on the positive. Um, you know, every industry has different dynamics right now. If it's tough, then that means a lot of other businesses are probably struggling to provide a great service. or they're going out of business, which is opening up market share for you. So have a growth mindset and understand that even if it's tough for you, that means it's also tough for everyone else, and that's an opportunity, right? They've done studies that show really strong businesses are many times launched and created in down cycles, right? Because it really forces you to focus, to get lean, to get efficient, to make the right decisions. And if you do that and others fall off and drop out, that means when the market turns and goes up, you capture market share, and you're able to capture that market share and grow really, really quickly on the other side because you're very, very well prepared to do that. You focus on your processes for your business, your acquisition channel, making it lean, making it efficient, acquiring great new long-term customers. It can really, really pay off for you. And you can really have a much, much stronger business that's ready for scale and for growth when others aren't, right? If someone starts a new business when the times are good, well, you're already 10 steps ahead. You already have everything figured out and you're going to be the one to win. You're not going to be able to compete at that time if you already made it through the tough time and had to make all those tough decisions, and had to do all those things for your business. So again, use financial tools to your advantage. Focus on the opportunities that you have. If you have access to capital, that's an advantage, right? Many don't. And if you have access to good financing that's flexible and that can make sense, and you have an opportunity and you're able to go for it right now, that can be a big advantage for you. Um, so identify the gaps, use financial tools, look for cash flow positive opportunities, look for opportunities where when the cash is coming back, it's the cost of capital versus the net income you're going to be able to earn from it. Compare those two and see the timeline of that and make sure it fits your business. And then if it does, then it can make sense to move forward and take advantage of the opportunity. So look for that. Look at the revenue you can bring in. Look at the margins of the revenue you can. Look at the cost it's going to take to do that. Look at all of these things, plan ahead, do it at the right time, and you're going to put yourself in a really, really strong position. Because while it's pretty simple, most don't have the ability to be financially savvy to understand how to do this and make the right move at the right time. So be the one who outperforms and does that. Um, Stay positive, have a growth mindset, right? It's an opportunity. We kind of went through this already, but it's easy to get caught up in the news and the doom and gloom, right? I think there's sayings around this, be greedy when others are fearful, and be fearful when others are greedy, right? So and there's going to be a lot of doom and gloom, and who knows when that's going to end? No one knows, but they're going to try to get clicks on it. Advertisers trying to get revenue from it. They're going to try to get you to click and watch. But what matters for you is to focus on your business. So focus on your business, focus on your opportunity. You can't control that other stuff. You just can't. And so obsessing over it or focusing on it without a plan, it sometimes can be counterproductive. Look at opportunities that you have for your business. You're the business owner. You know it better than anyone. So focus on that and outperforming in their environment. If it's tough for you, it's tougher for others too. Outperform them, right? If it's great out there in your industry, it's also great for you. You also have an opportunity to outperform as well, and prepare for when the down cycle hits you. Auto repair, wasn't doing so good a year or two ago. Neither were restaurants. It was really tough for them. The ones who made it through right now are absolutely printing money at the moment. They're doing very, very well. The same is going to be true for these other industries. That's how it works. The winners are going to be decided now. If you're in an industry in the market. So again, do all these things, plan ahead, prepare, and you'll be the winner on the other side. And there'll be the good times, there'll be the up cycle.